Hello, I'm Vadani Ariam. This video is about why does a business have good sales but the profit is not there? What's the reason? Some business owners think that they are doing well when they see sales in their business and conclude they will have the same success for a long time. Ultimately decide that is not a they decide that's a good sign of business. Entrepreneurs aim to get more customers, so they offer unaffordable discounts and free shipping of too much facilities they give, and also they fail to invoice the customers to get the money back on time. So they will have cash flow problems that will end up in having working capital problem. So that is not a good sign. Good sales and more customers, but business will not need help. It's not a good sign because no accounting systems was implemented or followed. When running a business, financial management must learn how sales and overall cost increase. When you start to advertise, when you start to give too much benefits to the customers, the expenses will escalate even without realizing. That shows the company did not have the following: budget, cash flow, management accounts, financial plan, and business plan. Let me explain that each of them. Budget. Budget is a thing that you prepare in advance of starting a business, or if you are running a business, the budget you prepare using the previous year's figures, taking inflation into account. That's very important. Then when you set up the budget, you cannot leave it like that. You can use it every month, or even if it's a new business, you have to check every week to see whether you are not ending up with a deficit budget. Deficit budget means that you have set up a total expenses that is there is a figure for total expenses that you have set it out, and you have set it up the total expenses sales as well. If the actual expenses go beyond the budgeted expenses, that's a negative budget. And the sales are less than the budgeted sales, that's a negative budget. So you have to immediately take action. You have to look into the reasons for that. And you cannot afford to neglect it. If you neglect it, the business will fail. So you have to take immediate action, make inquiries, the reason for those. Cash flow, the same thing. That is daily incoming and outgoing. So end of the day, you have to check whether you have overspent, whether you have not overspent. You might have sold goods on credit. The customers would have paid, but that cannot be taken into account when you are calculating the cash flow. Cash flow is the daily payments and daily sales, incomings. So if you see a negative cash flow, then you cannot neglect it. You have to take immediate action. Management accounts. People prepare the management accounts monthly or quarterly to know the business's profitability. That's very important. Even though it is not mandatory, it is to safeguard your business. You must prepare and know your business. How do you create management accounts? There is no fixed method for producing management accounts because it will depend entirely on your business needs and goals. However, the first thing that you need to do is to decide what your business key performance KPIs should be. If you need help determining these, please speak to your accountant who can work with you and provide guidance. Alongside your KPIs, there will be some standard accounting reports which include profit and loss account, cash flow statement, balance sheet. Profit and loss account is you prepare a statement at the end of each month. If you are a business running for a long time, they get used to these things and they set up the correct accounting systems. So they prepare the profit and loss account at the end of the year. Cash flow statement, I have explained this earlier. Balance sheet also at the end of the year for a business which is running for a long time with success. If you are a new business, you cannot afford to wait for the year to prepare these financial statements. You have to at least 6 months or 3 months, quarterly or monthly, quarterly or 6 monthly. You have to prepare these financial statements. Financial plan. One of the many methods small business owners choose is invoice factoring to support them financially if the company faces a money problem. So having done all these, you are facing the money problem. So when you are facing the problem, cash flow problem, you will not be able to have the proper working capital to run your business. The business will go down. So in that case, some people do invoice financing. They have what they have invoiced to their customers. They give it to a company and get the money. Those companies, financial invoice factoring companies, they pay at least 90% of the total of the invoice immediately. So that will help you to buy goods and make up the working capital, and your employees' salaries, all those immediate expenses, that will help. But that said, to get the money from invoice factoring companies, you must have enough invoices for them to give you the money, pay the money. And also you must have a support that you have selected the customers, the reliable customers, that they will pay them, even though they've been delayed a bit, they will pay the money. Otherwise, the invoice factoring company will not accept invoices to pay you the money. That might cause you to find it challenging to make the payroll on time. If you don't get the money, you will have all type of problems, or delay your suppliers payment. When you delay your suppliers payment, you will have many problems. You will run out of your supplies, and also you will have a bad history for your business. Bad credit history for your business. How do they come to this stage? When they make credit sales, they give more extended period for their clients to make the payments compared to the suppliers' terms of prices. Some suppliers won't give you a long time, so you will not have money because you have extended period for your customers. So you will run out of cash to pay your suppliers. A small business has little money in the bank, so that does not work. Is there a solution? So they decide to factor their invoices get paid, which helps them to pay the suppliers and employees. Besides, it avoids cash flow problems. You should never cash flow and the budget, they are the backbone of your business. You should never have cash flow problems. Business plan. So if you want to avoid these problems, you set up the business plan and follow this as a roadmap to run your business. A business plan shows a direction in detail of a company and how it can achieve its goals as a new business. A business plan includes an operational, marketing, and financial plan, explaining each section in detail. Also, a document setting out business future objectives and strategies for achieving them. Why do you need a business plan? Some people think like that. It's a document, describe your business. It covers almost all your business and the problems that you might face in the future. Therefore, it helps to clarify your business idea and set the goals for your business. If you start a company with a written document business plan, having all your thoughts in your head, you will remember that as time passes, if you face a problem, you will have a way to find a solution. Instead of going to other people and asking for advices, you must, because the other people might give you wrong advice because they don't know your business. You know your business and you know your business plan. You have to read it again and follow it up to come out of these problems. The things that will happen to a business without a business plan are as follows. Most businesses will fail in the first year. Reasons for failure are no plan, no marketing, insufficient funds, and poor management. You can resolve this with a business plan. Set your goal, financial analysis, proper management helps you to plan and find ways to meet your goals. Make use of the business plan to borrow money. It includes a marketing plan. Operational plan will be there. The exact help with a business plan is as follows. Helps you to identify your weak areas. Financial monitoring is possible. Able to find target areas for your customers. You can keep comparing your results maybe monthly. Free you from making mistakes continually. Everybody makes mistakes, but if you continue with the mistakes, it damages the business badly. Even before you start the business, you will know the possibility of success. You can help yourself to solve some problems, and if it is in the document, you can keep returning to the report to remind you of the possible dangers. Therefore, any business should follow the procedures correctly if they want to be successful and sustain the success forever. I hope you like this video. Thank you very much for watching this video. Thank you very much. Thank you. Bye for now.